Hey everyone, me Kevin here with a quick and late Friday warning from the Federal Reserve, an update from the Congressional Budget Office, and a quick note from Larry Kudlow. First, the president of the Federal Reserve Bank of St. Louis, Mr. James Bullard, who's one of the 12 bank presidents of the Fed, said in a Financial Times interview today, that's this paper, the peach-colored one, and he said, quote, "We're still in the middle of a financial crisis, and even though the initial wave is over, we could get a, quote, wave of substantial bankruptcies that could feed into the financial crisis. And this is exactly why the Fed has been introducing so much stimulus and why they're prepared to do even more." In English, things could potentially get real bad all over again, and that's why we've been cranking the money printer so much. Even though that's been disproportionately benefiting the rich, basically the rich have been getting richer because the rich invest in stocks and real estate, that is their justification for keeping the money printer running. Now, he did believe that the worst is behind us, that the damage that we saw in April, May, and June was the worst of it. But he said the next 90 days will be a very important tell, and he gave us a very fair warning that there could be a wave of bankruptcies in companies that we invest in. So if you invest in any retail company, a restaurant company, a travel company, maybe you invest in, I don't know, the Cheesecake Factory, or the airlines, or the cruise lines, or Dave & Buster's. Yes, bankruptcy is an option for these companies. And unfortunately, what that means for us is even if we own some of the shares, they could all get wiped out and go to zero. Doesn't mean that the business goes away. Just because, let's say, Dave & Buster's were to file bankruptcy, it does not mean that Dave & Buster's is not going to be here for us in 2 years. It does not mean it's going to be a Toys R Us bankruptcy and bye-bye Toys R Us forever. And then maybe it comes back a few years later with a different design or whatever, as like a single startup again. No, Dave & Buster's could literally just, let's file Chapter 11 and reorganize. Screw all the shareholders. Not good to screw all the shareholders, but anyway, do that, wipe out the shareholders, essentially, and just start up their business again. Now, there are a lot of legal fees involved in this. Companies don't want to file bankruptcy, but the Federal Reserve president here of St. Louis has a very good point. Be careful. And so, yes, your stock can go to zero. Yeah, I'm oversimplifying a little bit, but let's be real. Look, 3 months ago, it was fair game for us to buy companies like the airlines, the cruise lines, the Cheesecake Factory, the Red Robins, the Dave & Buster's, and yeah, these companies can double. Heck, Dave & Buster's, I think, could triple in value, but they could also go to zero. And that's why 92% of my portfolio now is in higher quality holdings that will be here, vaccine or not, without filing bankruptcy. Because remember, I don't think Cheesecake Factory, Dave & Buster's are going anywhere, but they might wipe out their shareholders. So it is something to be cautious of, and still, the Federal Reserve has not released the names of the people who have applied for the Main Street Lending Program. They said they were going to, they still have not done it. I have been checking every single day, and it's very, very frustrating. So make sure you have a lot of quality in your portfolio right now. I've updated my stock picks, by the way. You can go to metkevin.com/July2 to see my latest picks. That's July and then the number 2. metkevin.com/July2. And remember to use the link down below to get 2 completely free stocks when you sign up for Webull and deposit $100. Now, more optimistically, the Congressional Budget Office just released their new projection on the future of the economy. And it was actually kind of rosy. And part of me is like, how politically motivated was this? Because they started their report off by saying, quote, "If current laws governing federal taxes and spending remain in place," which current laws remaining in place is kind of like a direct reference, in my opinion, to Joe Biden because he plans on changing those laws. Anyway, that's how they started it off. If things remain the same, the Congressional Budget Office believes we will see a rapid decrease in the unemployment rate for the next year. They do not see inflation issues for the next decade at least, and they believe our economy is going to grow slower for the next 8 years than it would have without the pandemic, but by 2028, we'd be back on course. They also believe that interest rates will be lower this decade than last decade, which is also kind of crazy because I think we're all kind of wondering, like, what happens to real estate prices and stocks when interest rates tick up again. They think we might see lower rates this entire decade. Now, this is a very optimistic report. It's done by the nonpartisan Congressional Budget Office, so technically we're supposed to believe them, but I'm a little jaded, okay? Anyway, very optimistic here. They did say, though, that they did believe it was going to take until at least 2030 2030 for unemployment to return to that 4% range, which is what we've seen in the last years, which basically means we're going to be sitting around 6 to 7% unemployment for quite a while. Now, let's move on to what Larry Kudlow said. Larry Kudlow, as expected, applauded the jobs report. Many of you know that I've been very skeptical of this jobs report coming up for weeks because I thought the report would be very misleading. And certainly when I read the report, I found out that the data that they referenced and collected was collected between June 7th and June the 13th. But that was 2 weeks before we started seeing the big jump in cases and certain areas of the country start closing down again. Well, while Larry Kudlow did applaud this jobs report, he introduced a whole new kind of measure about how everything's still going great. And remember, he's the guy that's kind of feeding us information about the next rounds of stimulus. He says, hey, jobs report was good. Oh, but hey, everybody thought we were going to get to 30 million jobs of, 30 million people unemployed. We only got to like 21, 22. Now we're at 15, which is like half that. So we're doing great. Now, obviously, I don't actually think he thinks everything's going great and doing great, but yeah, based on what he said and the quote he gave, it makes it sound like we're making progress, but this kind of rosy optimism, I worry, is not very realistic. So these are things to pay attention to. We've got 3 different warnings and updates and optimism here, so you kind of have to pick your poison. My POV and my play right now is definitely sticking as much as possible into the higher quality stocks. I've been adding to Tesla as high as it is. I've been adding to my position in Tesla, and I've been adding to my positions in Peloton and some of the other companies. Check the pie. I also opened a position in the Lemonade company. They just IPO'd today, and I bought in around $54. I don't feel super confident about buying them above 70, but in that 50 range, which they hopefully do fall back to that range, I might be more of a buyer, unless of course I read some more information that proves me wrong otherwise. I'll be reading their report again this weekend. All right, folks. Well, there you have an update. If you appreciate this information, please consider sharing it with somebody who cares. And of course, like the video, subscribe, check out the coupon codes down below. It does expire on July 4th. And folks, we will see you next time.